Welcome to Accounting with Audra. In episode 1, I explained how the accounting equation is the backbone of all things accounting. In this second episode, we will discuss how debits and credits are used to increase and decrease various accounts included in each side of the equation. Debits on the left, credits on the right is a useful way to remember the starting point for our conversation, as well as other concepts discussed later. Generally speaking, the value of the left side of our equation, assets, is increased using a debit, whereas the right side of our equation is increased using a credit. Said another way, asset values are increased using debits, and liability and equity amounts are increased using credits. Understanding the asset and liability piece of this is quite simple. However, since equity is made up of several components, it is a more difficult piece to keep straight. Let's start with assets and liabilities before diving into equity. A useful mnemonic for remembering how to increase assets and liabilities is DACL. You can use a variety of sayings to keep the order straight. For example, dumb animals can't learn, or one of my personal favorites, doing accounting changes lives. Whatever saying works for you to keep your letters in DACL order, you'll never forget that to increase your accounts, you debit your assets and you credit your liabilities. Assets from a business perspective include those things that are valuable, like cash, accounts receivable, inventory, and buildings and equipment. If a company receives an asset, whether someone pays them cash, they buy a building, or they purchase inventory, accounting records the receipt of that asset on the date received by debiting the asset. For example, the purchase of a $2 million building would be recorded as a debit to building for $2 million. If a company has a decrease in assets because they use cash or sell an asset, this reduction is done by doing the opposite. In other words, they credit the asset account for the amount of the reduction. Let's assume instead that the company already had the building in their company and they're now selling it for $2 million of cash. The removal of the building asset from financials is done as a credit to building for $2 million. In this second example, we can actually look at the entire journal entry and see how it balances, as this transaction includes both a decrease to an asset, building, and an increase to an asset, cash. A complete journal entry would look like this: debit cash of $2 million and credit building of $2 million. Now let's switch over to liabilities. Liabilities from a business perspective includes those things that are due at some future point in time, like accounts payable, rent payable, salaries owed to employees, and other long-term borrowings. If a company is required to record a liability, accounting records the increase in that liability on the date determined by crediting it. In other words, we do the exact opposite of what we did to record an asset, which makes sense since assets have a positive impact on a business and liabilities have a negative impact on a business. For example, let's assume our company purchased $78,000 of inventory on account. In other words, they didn't have the cash for the goods, so they'll put it on account and pay it in the future. The company owes $78,000 to another company and must increase their liabilities for the amount due by crediting accounts payable for $78,000. The other side of the journal entry to make our equation balance would be the recording of inventory, an asset, by debiting inventory for $78,000. When the company finally pays off the payable, they will need to reduce the payable or debit accounts payable for $78,000 so that there is no longer a liability on the books. What's the offsetting credit? In this case, since the company is settling the payable with cash, they need to reduce cash, which is an asset, which we previously learned is done with a credit. If you can memorize or get comfortable with how accounts are increased, then you know in order to decrease the same account, you just do the opposite. Equity is the cumulative operations of a business. It includes any stock owned by shareholders, dividends paid out to shareholders, cumulative revenues of a company, and cumulative expenses. Equity correlates with assets and liabilities just as the accounting equation illustrates. However, in order to make the right journal entries, you have to think about whether the account you're debiting and crediting is an account that increases or decreases the equity section. If it's an account that has a positive impact on equity, you credit it. If it's an account that has a negative impact on equity, you then debit it. A useful way to remember the components of equity is to use the first letters of debit and credit. Debit is dividends and expenses are increased, and credit, common stock and revenue are increased with a credit. Let's walk through some examples and see if we can apply what we just learned looking only at the equity side of a transaction. A company decides to go public and is raising capital by issuing shares to its investors. The issuance of shares increases common stock. We increase common stock with a credit. The same company decides to pay dividends to its shareholders during the year. Dividends reduce equity and are therefore recorded with a debit to an account called retained earnings. Let's do another one. If a company is earning revenue for the provision of services to customers, revenue is increased with a credit. And finally, if our company is paying its employees a bonus for the year, it's an example of bonuses as an expense, we record that expense with a debit. Now that we have reviewed how each part of the accounting equation is increased or decreased with debits and credits, you can apply this to every journal entry you learn, as every account is mapped to be either an asset, liability, or a component of equity. In the beginning, using strategies to help you memorize how to increase an account that you can write down at the beginning of an exam or before you start to work will serve as a great reference guide. You know that to decrease that same account, you just need to do the opposite. So just memorize one side of everything, the increases. As you get more and more practice, whether something is debited or credited will be second nature. And in my next video, we will get more practice at dealing with cash and the offset through other areas like other assets, liabilities, and equity. If Accounting with Audra is helping you with your accounting knowledge, please consider subscribing to receive updates on new episodes as they air. And of course, if you have any suggestions for other videos to be made easy, feel free to send them in the comment section.